Hi, Jonathan York, Bay Financial Partners, looking at the investment market. The fragile ceasefire that existed between Iran and the US has now capitulated. Now that was really all on the back of the shipping routes that were being used to navigate the Straits of Hormuz. Iran was pretty adamant that they were to use one route. The US has come out and said, no, actually you can use whichever route you want. And that's seen a resumption in hostilities. Again, sort of quite interesting because certainly support for Trump and the war in the US is sort of waning all the time. And Trump is really adamant that, Iran wants to make a deal. But at present, it looks like the US needs to make a deal more than Iran. Especially with those midterms coming up in November. And just on the midterms, Trump has removed the remaining members of the Election Assistance Commission. Because Trump is still pushing his agenda that there is a lot of election fraud, although all the cases he's brought before the courts have been thrown out without substance. So on the back of the resumption of hostilities, oil's obviously jumped up around 10%. Which certainly doesn't bode well for the US inflation picture. CPI came out this morning at 3.5. But you would expect that to rise over the next sort of couple of months as oil has started to increase. And that's still well above the Fed's target of 2%. So on the back of that, US rates are still pretty firm. The 2-year is 4.19. The 10-year is 4.58. That all-important 30-year is at 5.09. So again, a pretty clear indication from the bond market of which way they see interest rates going, and it's certainly not down. Which again poses a few problems for Trump because, he has been touting that interest rates will be coming down, especially once he got the new Fed chair, Kevin Walsh, in place. Trump is also seeing further pushback from the courts on his policies and his actions, which again is not pleasing him. And all the time his popularity seems to be decreasing by the week. Now, as we start to see the US earnings coming through in the second quarter, a few of the major banks have reported and pretty major beats on the estimates. So it will just be pretty interesting to see the guidance going forward now, especially on the major big tech companies, because the Magnificent Seven for the sort of first quarter were down around 10%. There was a little bit of further weakness as well on the payrolls number. That came in at only 57,000. And the last 2 months were revised down as well. So certainly not quite as robust and strong on the payrolls numbers as first reported. So as mentioned, oil has traded up around 10%, currently around 79.80 and change. Now, if you look back when the sort of ceasefire was announced, oil did trade back on WTI back below $70. So that has some major implications out there for global inflation, and certainly in the US as well, as the driving season's getting well underway now. It's going to really be pretty hard on the US consumer at the gas pumps. Now, potentially in the UK, we've got a new Prime Minister with Andy Burnham. But what is grabbing the headlines in the UK is the investigation into Nigel Farage and his financial dealings. Now, he's tried to circumnavigate that by resigning from Parliament and then forcing a by-election. And claiming that will be the voters versus the establishment. But what he doesn't seem to understand is that even if he gets re-elected by his constituents, he is still under investigation. So it will be very interesting to see how that all plays out. Now, Europe's still suffering a pretty major heat wave and some pretty big wildfires in Spain and France. So hopefully that won't impact the tourism market too much. And almost forgotten, sort of under the radar, you've still got the Russia-Ukraine war, which is sort of rumbling on and showing no signs of a solution. Now in Australia, slightly better news on the CPI for May. That was down 0.7. Year on year was still 4%. But potentially, given the minutes coming out from the RBA that although they're still concerned about sort of inflation. Potentially we might have seen the last rate hike for this year. Although those minutes certainly were released before the latest Iran-US conflict. Now here in New Zealand, on what was a pretty tight call, the RBA did hike the OCR, taking it up to 2.5%. And that's the first hike since April 2023. Now the next meeting isn't until September, so it'll just be interesting to see how the inflation numbers come through, because they're coming out next week. But again, potentially there is just one more hike for this year, which will still only take the OCR, if that does materialise, to 2.75%. And you've got to weigh that up against the New Zealand economy that is still pretty fragile, and indeed suffered a little bit of further bad news this week with Fonterra cutting back the projected milk payout, taking that down to $9.25. Now that's still a reasonable number, but potentially that 50-cent cut does take around sort of $40,000 to $50,000 out of the farmers' pockets. Although again, the recent sort of surveys coming out from some of the major banks was pretty encouraging for the New Zealand economy, showing a bit of an uplift. But again, that was before the resumption of the Iran-US conflict. And although fuel has certainly come down at the pumps, you'd expect a slight increase as that all has started to tick up. We are seeing a little bit of increase as well in sort of housing activity. Sales are up, although prices are still pretty flat to slightly down. But on a little bit of good news, mortgage repayment arrears has fallen to a 4-year low. And that's certainly encouraging. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.